When you are making a decision as a trader, you need to know that the main purpose it is to make money. So when you're analyzing the market and opening a position, you should know that you are opening that position so that you make money, and a lot of it. But us as day traders, we have a tendency of limiting ourselves. For an example, we'll open a position. Maybe let's say you open a long position here, you put your stop all the way down there, and then maybe you put your target all the way up there. And remember that at the moment when you open your position all the way there, you won't be having all this price. You'll just be having nothing. You'll be just estimating that, hey, it will be awesome that I exit there, because you also have exit strategies that, hey, I'm going to target the exact same size of the previous wave, and then from there I'm going to cut my profit. So you can do this and say, okay, all the way up there I'm going to cut my profit. You need to know that that's something which comes from fear. When you do things like this, when you set targets without having the price, you need to know that it's something that comes from fear. Why? Because you don't know what the price is going to do in this era, or how the price is going to be behaving as it reaches this era. That's why I always encourage that you should avoid by all means setting take profits. You should set a stop loss, but a take profit, if you set it, you need to know that it might be a limitation. Why? Because let's compare a day trader and a long-term investor. Let's say we both open the position all the way there. We open a long position all the way there. The day trader is going to make money from that area, and then he's out of the market. And then maybe in the near future, he's going to open the next position here and then close it again all the way up there. So you see that the day trader has only made this amount of points. Now he's only taken advantage of this amount of points, but the long-term investor, because he doesn't jump in and out of the market, he's able to make money from all the way here to all the way up there, as long as the market is moving up. So you need to know that getting in and getting out of the market, it might be a limitation. But what you need to do as a trader, even if you're a scalper, even if you're a day trader, you need to make sure that when you analyze from a smaller time frame, your perspective is also on a longer term move. Now, for an example, there is no need for you to close a trade around here. Why? The market is still showing that, hey, I'm moving up and I'm moving up with strength. Why are you closing that trade? What's the main motivation of closing that trade? Because the market is still moving on your favor. The market is still moving on a downtrend. But you, because you are afraid that, hey, the market is going to just begin to go all the way down and I'm going to lose all that I've made, then you decide to close your profits at a very, very close level, which is very, very bad. This is the reason why I said you should set a stop loss, so that you are not scared of corrective waves, because that's our problem. We are so scared of these pullbacks. We think that they might lead to a reversal because we are not good at managing risk. You need to understand that trading is all about taking risk, but the risk should always be less or smaller than the anticipated returns. I hope this is making sense. So keep it in mind that when you are opening a long position, you need to know that you are also focusing on the long term, because that's how the market behaves. If it moves in a trend, it tends to move in a trend for a long period of time. So don't rob yourself of those returns by just being afraid. So just leave fear aside, make your trading decisions, make sure that you risk the proper amount, because that's the foundation of fearless trading. Risk the proper amount. You will not be afraid when the market comes back to this level. Why? Because this level is only 1% of your account, or it's only 2% of your account, depending on how much you wanna risk. I hope this is making sense. So don't rob yourself, don't limit yourself. When the market is moving on your favor, don't get out until it is a clear downward move. And when we talk about a downward move, we are talking about a sequence of lower highs and lower lows. If you don't see this in a wave level, then you are not exiting the market. Don't be tempted by such small correctives and thinking that, hey, the market is about to go down, let me jump out. No, you are not going to be profitable in the long run. But the only way to be profitable in the long run, it is saying, okay, I'm entering this market and I'm not jumping out until it is clearly dying, or it is clearly moving on the opposite direction. I'm just gonna keep it short and leave it here. Thank you guys for watching.